The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 12th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, that is something we must master each and every day. So let's begin with an empowering belief or two. And it goes like this. You know, what's talked about, folks, is a dream. What's envisioned is exciting. But what's planned, well, that becomes possible. And you know what, folks? What's scheduled is real out there. Think about that. What's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But most importantly, what's scheduled becomes real. Remember, no man, no woman is happy unless they've found a way to contribute beyond themselves. You know what I say? Schedule your happiness, folks. Schedule your happiness by contributing to others. What is it that you're going to do right now, today, to contribute to somebody else out there? Lastly, I'll leave you with this. If you can't, then you must. And if you must, guess what? You can. Remember, identify whatever problems it is that you have in your life, but only give them 5% of your energy. Focus the other 95% on the solution. That alone, folks, will absolutely change your life. Let's go check out the changing life here in the marketplace right now. The Dow is up 20 points after being up 100 and some odd points this morning. S&P up 2. Composite just slightly in the red, off a 1.5 right now. Russell 2000 up 2 points. Google down $3. Apple off 2.22. Microsoft up 25 ticks. Intel up 7. Cisco up 2 pennies. To the upside here, Alta Salon leading the charge, up a nice 16% this morning, up $13 and change. Cooper Tire on a buyout by India's, what was the name of it? What's the name of their? Apollo, that's right. Apollo Tires having a nice 40% premium in that equity. You've got Tesla Motors up 376. Celgene, CELG up a couple, 2.5%, up $3 and change. Spectra Energy up 10%, up $3 and change. Herbalife up 6.5%, up $2.80. New Skin Enterprises up a couple bucks. Questcor Pharmaceuticals having another nice day out there, up a couple of bucks out here. To the downside, Biogen, BIB, leading the charge. You've got Google off 250, Equinix, EQUIX off 286, Clovis Oncology off 271, Apple's off a couple of bucks, Baidu down about 2, Netflix off $1.50, First Solar off $1.30, X1 is an XONE as well as the name EXONE, down about 2.5% this morning, and Palo Alto Networks, PANW, off 2.5%. Our call number is 877-927-6648. Let's go take a look at these markets here. We're looking at the ES Mini right now, traveling at the low of its session here, this 30-minute bar. It's at 1626 here. It's going to be now what's interesting about the ES here is yesterday, as we got that expected bounce as we were coming in to that 10 o'clock time frame. We had a nice little bullish engulfing that gave us that confirmation on it. And as it made its move, it made a move up to the sweet 618 level. That's going from our swing point high at 10 a.m. on June the 10th, that high out there all the way down to the low that was put in. You can see the 618 level was 1638 and a quarter. Now, what's interesting here is as the market was making its high coming into the 10 o'clock time frame, it was also 1638 and a quarter. So we can see that the sellers, this is truly a formidable area of resistance now. Second time up here. Yesterday at 12 noon was the first time. And then we saw just some light selling, some small-bodied candles, you know, as folks went to lunch out there. And then the selling really picked up at about 1:30. Now, the move down wasn't really warranted. In fact, it gave us that what it did do is it gave us that nice VIX reading of above 10%, which said that we had a better than 80%, well, not a better, we had an 80% chance of a nice pop in the market. That's what we got out here this morning as the market moved higher. Now what we are seeing is that truly is a line of resistance. So 1638 and a quarter is something you want to mark down on your system, because if the ES Mini gets back up there, the key is that going to be an area where it gives it up again? And we will get probably another chance as it goes as we move into on the 30-minute chart, as we move into the oversold territory. In fact, if I switch over into a 10-minute chart out here, I'm sure we're heading down towards those extreme areas. We'll pull over to that area, and we most certainly are. So it's just a matter of waiting patiently here, waiting for the bulls to show up. It's going to have to alleviate some of this oversold territory. But the real key now, and if you're listening during the first hour of the show, we were looking at a possible Gartley sell pattern at about 1643 and a quarter. And so long as the area here, the C point of this, which is down at yesterday's low at about 1624.50. So long as that area holds, this Gartley sell pattern is still in effect out here. It's a 10-minute chart that we're looking at. We're only 2 minutes into that session, but we'll keep our eyes on this here and see if we've got any bullish candles. That's a hammer candle right now, but we have 8 minutes left in the trading session before we determine whether or not there are any bulls here defending these positions. We clearly know where the bears are defending their positions, so we're going to have to keep a close attention to that 1637-ish area. If we take a look at let's go take a look at the indexes out here. If we take a look at the S&P 500, now in the S&P 500, what you're seeing here with these green boxes that are marked out here, this is coming off of the November lows. I'm just really dealing off of the November low out here, November 16th. And what these green boxes represent is each of the VIX, one-day VIX increases of 10% or more. The yellow boxes happen to be also 10% or more. They just happen to be patterns that have failed. What do I mean by failed? What I mean by fail is that on each of these occasions here, 8 of the 10 occasions, what we have seen is we've seen a market close higher after we've seen that 10% one-day volatility surge out here. So 8 out of 10, that says that today's market should close higher out here. We've already seen a nice bounce this morning out there. And, of course, we're looking at that 0.618 Gartley buy pattern that formed last Thursday, a week ago Thursday. Now, the normal move on that, if we go from the swing point high out here, which is the May 22nd level, down to the low of last Thursday, is a bit higher. 1653 is your 0.618 area, but this really does set up the possibility of moving maybe as high as 1668. But it's going to have to get through those sellers on that 30-minute chart that are clearly just camped out there. And it's nothing like watching a battle unfold, because it's so clear and easy to see where the sellers are, and they are truly camped out at about 1638 on the ES Mini. Let's go down to Sarasota to our man, John. John, thanks for calling. Thanks for holding. How are you today?
Very good, Steve. Thank you. How about yourself?
I'm doing excellent. Thanks so much for asking. You wanted to take a look at Royal Gold, I believe?
Yeah. Where is it going?
Where's it going? Are you in it? Looking to get in it? Tell me what you're doing here. And
looking to get in.
Looking to get in. Okay. So RGLD is the ticker symbol, folks. Give me a second here to actually pull it up on the screen. And right now it's traveling at 53.63 out here. Give me a moment here. I want to flush this screen and then pull up a restart out here. Oh, I didn't want to do that. Give me a moment here. And so as we take a look at Royal Gold, number one, John, this thing, it had that big gap down here on April the 15th. And it did that with 3 million shares to the downside. What you have not really seen on this equity is any real sign of strength off of the bottom. The only sign of strength is that April 25th area. So this at least wants to come back and test, in my opinion, it wants to come back and at least test the April 18th low out at about $50.20. What you'd like to see is it come down, test that, and do it less than 1.5 million shares. Now, at the same time that that's going on, which I think that you also want to see, now it's a daily chart, and if it's okay with you, I'm going to flip back and forth between a couple of charts here. What you'd like to see take place at about that same time is what you'd like to see take place at that same time is what's going on in gold, and you'd like to see gold get down there, get that one big push down to test that 1321.50 area. And if gold can get down there, test 1321.50, do it on less than 700,000 contracts, which should be relatively easy to do, and then hold. And then if you get really, if you get a bullish candle there, then I would say on the gold equities you're off to the races. The problem is if you get a close below 1321.50, then it's too early to get in on that trade. And I'll pull up this other chart that I've got on my screen out here, and this is the gold contract. This is the continuous contract, and the red line on here, John, is the gold miners ETF, which of course Royal Gold is a part of. And if we take a look at that red line, you can see how the red line here, the Gold Miners Trust, just absolutely follows the direction of gold out here. And that's why timing an entry into Royal Gold is going to be so important to be paying attention to the actual gold contract, in my opinion, to make a decision out there. If I go back to Royal Gold and I pull up a longer-term chart, let's take a look here, John, at a weekly chart for us. Let's see what it's doing on the weekly, see if it's back up against any swing points or anything like that. Let me refresh my screen out here, and let me do this as well. So as we take a look at Royal Gold, one of the other problems that this thing has, it's below its 200-day exponential moving average on the weekly chart out here. So on the weekly chart, if you're tracking it, I would track it against either Basil's 9 period or my 8 period that I use, exponential moving average, and you'd want to make sure that price is above that area. Price has not been above that area at all on this thing, so that's also a bit bearish. If we take a look at swing points that this thing is going against here, it's got this high volume. What's holding it right now, it seems to be holding it in place on the weekly basis, is June 25th, 2010. The low there is 48 and a quarter, and that's got 10 million shares. So the volume there seems like that's the area where it's being held, as well as the swing point low just a few weeks later, right around the July 30th, 2010 timeframe. You don't want to, if this thing breaks below 48 and a quarter out here, then, John, this thing could easily come all the way back into October of 2008 out there. So this one may not be the strongest of the equities, of the gold equities to be paying attention to, but those are the parameters that I'm looking at. Really pay attention to what happens in gold, and before you come into probably any of the miners out there. Does that help, or is there something else that you're looking at that you're seeing that I should take a look at too?
No.
No.
Steve,
yeah.
What are the various lines? You have a 9-day moving average. What else?
Yeah, so on this chart here, what I find to be a great, nice lagging momentum indicator is the 8-day. So I use the 8, the 21, the 50, and the 200. And it's really it's a really when you get this thing, John, if you can stay on through the break here, we'll come back. We'll take a look at those moving averages for you, and I'll give you a little bit more of an explanation. All righty?
Good, I'll stay there. Hey,
absolutely. 877-927-6648. Dow's up about 20 points right now. We'll be right back, folks.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And in the yin and the yang of the marketplace, it's the yings, it's the bulls here right now, trying to assert their pressure here. Again, we're just looking at the 10-minute chart of the ES Mini. I still have 6 minutes to go in this session here, but we're seeing the market, in that extreme oversold territory, and you can see the bullish engulfing that is forming out here. So let's assume that the bulls are able to reassert themselves. We're really going to want to be paying attention as price moves back up in that 1630. 7 area. I suspect that those bears are just sitting out there and they want to sell right into it, right about that 1637 level. Let's go back out to John in Sarasota. And John was asking about if you watch us on Tiger TV, sometimes you'll see 4 squiggly lines on my charts out here. And John, what I use, this is, it's a great trending tool. Just simply, it's looking for the 8. I'm looking at the 8-day, and you can use a 9, I suppose. Basil uses the 9-day. I don't know if he uses the other 3 though. I'm using the 8, the 21, the 50, and the 200. And when you can see, and this is a 30-minute chart that I have on my screen. Actually, I'm going to go over because the currency. I know that you pay attention to the currency market out here, and so I've got on my screen here the euro U.S. dollar. Now, ideally, John, what you'd like to do is you love to be able to find chart patterns where all 3 of these will converge at the same area, and then watch how it breaks apart. Now, on the daily chart out here. I don't know if I have such a time period out there, but if you're going to go ahead and apply those to any charts on your screen, watch for when they all really converge within each other. Now, in the case of the euro, on the daily chart, if you come back here to the session of December 12th, 2012, this was lined up on from a lagging standpoint from a bullish because you had the 8-day above the 21. So on my screen, that's the black line, which is above the red line, which happened to be the 21, above the 50, the blue, and which is above the 200-day. And whenever you see that tells you, again, this is from a lagging indicator standpoint, that the momentum of the market is truly to the upside out here. And and then that's what we saw. And then you want to make sure that you're using just your other traditional patterns, whether it's A to B equals CD patterns, whether it's Gartley butterfly patterns, whatever it is that might be out there to help you, while you're inside any kind of a trade. So if we take a look at where we're at right now on the daily chart, you can see on the daily chart inside the euro, and we're very close to a 1.618 Gartley sell pattern. We showed that during the first session, but right now from an exponential moving average, you can see the 8-day is above the 21, is above the 50, and is above the 200. And we just went into that territory here. We did that a couple of trading sessions ago. And that's another reason, just one more reason, to be paying attention and waiting for a bearish candle to show up before going ahead and selling the, at least in my opinion, before selling the euro out here, because you've got too many things that say be patient and just wait for example, this Gartley sell pattern to possibly complete out here. Because if you don't get the bearish reversal candle, then what can happen is to either work off the overbought condition, price can just simply travel sideways. It can even get into more of an overbought condition. But when you have these lagging indicators that say, okay, momentum is to the upside and we just cleared that zone now, it really does set up the potential opportunity for the euro to move up to the 0.786 area. But right now it's moving towards an area that it will be a sell opportunity, but you really would like to wait for the bears. Now, in this case here, John, let's just say that the bears were to show up tomorrow. Whenever it takes place, you get a nice bearish reversal candle, and then you're not making your trade decisions on these moving averages, but they do help you as a piece of information to be able to identify trends, and it's really great when you can see them all really kind of converge together, kind of creating a little bit of a rainbow and then explode out. And whichever way price explodes out of there, then it actually does offer you an opportunity for a trade to go ahead and get in. So, any questions? Any questions about those?
No, no, really good. Now, they talk about the MUX. What's his name? His gold mining company. What do you see? What do you see for what's the low going to be on that one?
Okay, so we're talking about McEwen, Rob McEwen. His company, let's go take a look at it here. Give me a moment to pull that up on my screen. MUX is the ticker symbol out here. Let me go ahead and just totally get everything off of this chart. We'll just simply start over. And, hey, John, do you mind holding through the next segment?
No, I can do that. Thanks.
All righty. Folks, when we come back here, it's the John from Sarasota and Steve Rhodes. John is my co-host this morning, which I love. Thank you very much. We'll be right back. You've got the Dow's up 41, S&P is up 4. We will take a look at McEwen Mining when we get right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 43 right now. S&P up 5. Russell 2000 up about 3 points out here. Gold trading up $7, and we're going back out to Sarasota, Florida, with John. We're taking a look at McEwen Mining. The ticker symbol on this is MUX. What I have on my screen here is the daily chart. And John, I believe your question was, how low is it going?
Well, a good buy. Good buy point.
Yeah, so we were looking at Royal Gold, and now we're looking at first with John. Now we're looking at McEwen Mining. Now, what McEwen Mining has that Royal Gold did not have, a couple of things. Number one, we don't see any gap that McEwen Mining has to go up against, where Royal Gold did have that gap out there. And those gaps are serious. They're important areas of resistance. So what's nice about this chart here, and just taking a look at the time frame of the last move down, we'll call it from about the April 5th time frame to now, it doesn't have that as a resistance area. The other thing that this has, it has two nice signs of strength. It has one from May 20th. So we saw a wide price spread. Went from a low of $1.91 to a high of $2.35, and did it with accelerated volume, 5.5 million shares. And then we had another sign of strength out here. Didn't have the wide price spread, but it certainly did have the additional accelerated volume, 5.5 million on May 22nd out there. Goes up, makes a high out here on June the 3rd. Does that with 3.5 million shares. And let's see, what that was really going against is really this volume bar here from March the 6th. Looks like, some folks wanting to get some of their money back. They might have been in somewhere between 271 and 215. And so now if you take a look at the volume on that bar, you got 6 million shares. And the way this is pulling back, it's pretty nice. 2.5 million a couple days ago, 1.5 million looks like on Monday, yesterday, 2 million shares. Today so far, 763,000 shares. So this might be, and again, what you'd want to really try to do on McEwen Mining is also benchmark it against gold when and if gold goes down and tests that low. And then you're going to benchmark what is McEwen Mining doing at about the 191-ish level out there. If it comes down, tests 191, does it on less than 5.5 million shares, and gold closes back up above that 1321 level, then that would be your buy. To me, that would be your buy on McEwen Mining. If you all of a sudden start to see volume coming out of this thing, then it says you got to wait for another area. Where would that be? If I just put a longer term, a monthly chart up here, we see where McEwen Mining is basically traveling to. If gold breaks, here's the deal, if gold breaks its low, then McEwen Mining could easily come all the way back into the 38-cent to $1.30 level out there. So that's really why I think you really need to be timing this based on what goes on inside the gold contract. Now, if gold here, as I know that the commercial traders out there, they're betting on a nice bottom being formed. And if gold here can break above the swing point from, give me a moment here, I'm going to pull this back up. I think it's April the 16th, which is a price level of 1404.20, and do it with some conviction and some volume behind it, then McEwen Mining might be the buy, in essence, at that stage. Also when it breaks above this level here. But it's got to do it with some conviction. Right now, it looks to me like the conviction in gold is just to go back and test those lows out there. So that's how I would really time all those. And I'd go through each of the gold stocks and try to find those that have a little bit less of resistance area to get through, like McEwen Mining. It doesn't have really any resistance, not as much as Royal Gold did.
Okay.
All righty?
I appreciate all the help. Thank you very much. You're doing a great job.
Well, thanks. I appreciate you listening. Thanks for calling. Call anytime. That was John in Sarasota. Let's check out, let's see here. What have we not looked at here in the market? Bonds. Let's go check in on bonds, and then we should go take a look at I think we did this yesterday. We were looking at some of the SPDR ETFs out here, so we'll want to go ahead and do that, see what's going on inside the S&P. Yesterday you had bonds move down, make a lower low out at the 138.28 level. Today, just really traveling sideways out here, so I'm not seeing a whole lot here in the bond world. Let's go back also, and let's take a look at what went on around the world last night. Speaking of the world here, we did have the Nikkei push lower. Let's go see what the Nikkei did. It did at the open. It gapped down at the open about 2%. It tested the swing point. I don't have the volume, but it's very possible that what it did yesterday was it rejected that swing point from June 7th. Now, June 7th, as I say, I don't have the volumes out here, but what we know about June 7th is it came down into that gap up, and that gap up area was going back to April the 4th. It tested that area, rejected it. That says it should be a strong area of support. Doesn't mean it can't be broken, but it is most certainly a strong area of support, and that level is 12,634.54. Now, what happened yesterday, last evening, was we saw a test of that area and a close higher, meaning it got to the top of the swing point, June 7th, which was 13,106.20. And got up and went ahead and closed higher. It did not actually close inside the prior session, which would have been 13,296.31. It closed at 13,298.32. So I don't know, without knowing the volume in here, I don't, it looks like it was certainly a rejection of the June 7th swing point out here. But, it could set up a possible move higher. Without volumes, it's very difficult for me to say. But let's go check out what's going on over in Europe. The FTSE, we know the FTSE here has been really struggling. Today having an inside day, so not releasing a whole lot of information to us. But it's 8.5% off of its high. Its high was established back here on May 22nd as well. So this thing is showing, it's suggesting, that our markets here in the U.S., we can expect a good 10+%, in my opinion, at least a 10% correction when all things are said and done out there. I think it's even more than that, but you can see here inside the FTSE right now, it's traveling inside yesterday's swing point. That low was 6280.08 down there, and it's got more room to run before it gets into that oversold level. The key is going to be if it breaks the low from April 5th, which is 6214. That will spell trouble, and that may spell trouble to move all the way down to 58.77 out here. It is below the May highs out here, below the May lows, quite frankly. The May low on this was, May Day was 64.29, so you're below that area. It's taken back all of May's earnings, that was inside the FTSE. The DAX looks more like our markets here, or at least it did as of yesterday. It looks like it does as of today as well, although it's trading a bit lower. We are not trading lower at the moment. The DAX here waiting to get its signal from us, but it's traveling out at 81.57. Its B point is going to be, and I'm assuming this is also a high-volume session like ours is in our marketplace, is the low here from June 7th, which is 8,034.55. Let's go take a look at the spiders now. Let's go look at inside the S&P 500. Let's see what we have. Inside the XLE yesterday, we were taking a look at the XLE and all the great patterns out here, all the sell patterns, I should say, that showed up inside the XLE up at its highs out here on May 22nd. Yesterday, got back inside the range, lower part of its range. What I mean by that is coming all the way to the left-hand side of the screen and taking a look at that April 1st swing point high, $80.69. You're back down below that area. Let's go check out the volumes as it's coming into that high volume low, high-ish volume low, I should say. Inside the XLE wasn't too bad on that June 6th day. 18 million shares. As it got back there yesterday, it came down with only 10 million shares. Not enough to bust it down. Hasn't tested the lows, but it's just not enough energy to bust it down. Today, only 2.2 million shares in over an hour of trading. Still, again, for a second day in a row, not enough to bust things down out here when we take a look at that key June 6th swing point. The XLE, I don't remember what the weighting is inside the S&P 500, but between the XLE, XLF, XLK, that makes up the bulk of what we would look at. So saying the XLK, let's go see what the XLK is also doing. The XLK yesterday getting into the June 6th swing point, 14 million shares, but nowhere near the volume that it needed. Half the volume yesterday, 7.3 million shares. The top of that bar was 31.49 June 6th, closed out yesterday at 31.47, so closed inside it. Today, though, we're seeing a little bit of a rejection of that area. Volume so far today, and it did test the top of it, 1.3 million shares. That sets up maybe about, 9 million shares. Not enough to bust it down. Doesn't look like today is going to be the day that the markets are going to move. Well, if they're going to do it, they're going to do it in a flurry here. That flurry has not started here in the first round. We are through the first hour of trading. That certainly is the first round. So it'll have to be a knockout punch in the last round of trading if it's going to really bust through that area. But right now, it has rejected that high volume low from June the 6th out here. Let's go take a look at the financials, the XLF, see what the XLF is doing out here. As soon as I can pull that up. There we go. And the XLF, that's trading at 1968. So yesterday, it came back. I believe it tested the high of June 6th, 1964. It got down, and it did, 1962. The volume on June the 6th out here, 71 million shares. Now, yesterday, interestingly enough, down was 70 million shares, so it's pushing into that low with volume. Something to think about. Still, though, it rejected that area. Today in trading this morning, the low has been 1964. 1964 is a test of that June 6 high. Volume here so far today, 12 million shares. So it's going to have a little bit lighter volume. Looks like a little bit lighter volume than yesterday's push down inside the XLF. So that would be another rejection of that swing point low. What does that say? It says it should at least go test the June 10th area. More likely, if it closes inside May 22nd, and that low is 1975. It's not there yet. Then that sets up a test, I would say, of May 30th out here. That low would be 1992, and certainly that candle from June 10th. So that's on the XLF. That's on the financial sector in the market. I'm going to switch over. We're going to go back over into the 10-minute chart on the ES, see what we have going on out here. Looks like they sent in the first team on the explorers on that bullish engulfing candle that showed up at 10:30 out here, and it looks like they forgot to send out the memo to the rest of the bulls because that area just simply hasn't held. Now, it was a small-bodied candle out here, and if this area holds, that means a close above the 1628 near 1627.50, and that would be the 10-minute chart. That would be over the next 4 minutes. And these bulls here are doing the best that they can to defend their position. But we don't see a second platoon here that has come in on that 10-minute session here inside the ES Mini on a 10-minute basis. And so right now, still this pattern here, this larger pattern on the 10-minute chart. So long as the 1624.50 area is not taken out, that still is in effect, but it is going to have to get through a line of troops that are waiting right up here, firing away at the 1637 area. Let's see, what else can we look at out here that maybe I haven't done for us today? Let's see, you've got gold and the king. Now let's go take a look at the king. If we take a look at king dollar here, give me a moment, although I have a slight delay on my dollar index. That's because ICE charges $80, and I'll take a 10-minute delay for like $3. You got the King dollar traveling at 81.08. So let's take a look at the retracement. We can also see back here getting towards that over sold condition, not completely down there. But if we take a look at from low to high, you can see sitting right at sweet 618. That's coming off of the swing point low from February 1st, 2013. That price point was 78.92, all the way up to the high of 84.60 out here. So the retracement, no real damage, although these high volume bars most certainly on June 6th and the following session, June 7th out there, that's not a real positive sign in the marketplace. But the king is sitting at 81.08, and the king, if it doesn't hold this level, 80.13 would be its next move down, and that would be the sweet 786 level. Let's go. Let's take a look in on the currency pairs. Let's go see what our friend, the euro yen, is doing, because that often points the direction of the market. So as we take a look at the 30-minute chart here, let's look at the 30-minute chart here. Looks like this is setting up to come back and test its lows from 2:30 in the afternoon yesterday. That would be a price level of about 127.08. Let's take a look. First, I want to put this on a daily chart, and then we'll come back to the 30-minute. So on the daily chart, really just an inside day from yesterday's session, but still continues to point lower. The trend inside the euro Japanese yen is to the downside, and that is another indication that our markets are headed lower. In the they're going to just simply going to continue to head lower out here. The normal retracement for these patterns out here inside the euro Japanese yen says that, and you can see right now it's just dealing with the 0.382 level. That's coming off of the swing point from February 25th low. That's 118.70. All the way up to the 133.78 level. As soon as it can contend with this 0.382 retracement level, 124.46 would be next on its target, and there'd be nothing wrong with it. It would just simply be the normal 0.618 retracement. But that, folks, is the currency pair that truly just simply points the direction for the markets out here. Dow is up 10. S&P is up 1. The NASDAQ is basically flat, down 77 cents. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's check in on some of these stocks that we have looked at here over the last few days here. Let's start off taking a look at IRM. That is Iron Mountain, I believe. Let me just make sure that is the equity. Gapping down with some huge volume back on the trading session of June the 7th. 16 million shares. Now, what Iron Mountain did was it came back into the area that it had broken out in on June the 6th. Now, it was 11 million shares to the upside, but it has not been able to break that area. You can see here in the extreme oversold territory, just moving sideways, breaking just working that oversold condition off. So this thing may be getting ready to take on that gap. Now, it's important to watch this equity here because it could also set up a heck of an island reversal in an area that for some reason has held as support. Volume-wise, doesn't make a lot of sense, but we just simply keep it on my watch list chart out here. But right now, just really, as you can see from the oversold condition and just moving sideways out here, right now what it tells us it's doing, because it moved down there with volume, stopped really just before that swing point. I'm going to use a gap as a swing point as well. Stopped just before it. It's just working off the oversold area to just simply get some more energy to take that out altogether. But the other option, the bull side in this equity here, would be a gap up at some point in time, creating a heck of an island reversal out there. That is on Iron Mountain. One of the other Theravance, THRX, has been a big performer out here. This had a three-gap play. It did have the actual exhaustion gap. You can see the first gap out here took place on April 16th, and that was $1.42. The next gap, which was on April 18th, that was $1.34. And that final gap, that third gap, that true exhaustion gap, was $2.65. So it was bigger in both third gap, bigger in both dollars and percentage terms, which is what you need. Now, what this did was it came back into that sign of strength here, which was that last gap, which came back into the May 10th area, which had 4.7 million shares, even on the day that it had gapped up from. It actually gapped up with twice that volume, 8 million shares, and it came back in there with about 2.6 million shares. That was on June the 5th out here. But it's also been going up on light volume. So the question is this really just setting up an A to B equals CD down pattern so that it will come all the way back to the first gap out here? And that is really what the more likely scenario is. That is on Theravance, which would bring it all the way back to about the price level of, say, maybe about $24.63. The top of the gap here is $23.84 on April the 12th. And so far, volume is really pretty nice as this thing potentially pulls back even further. But if we look at yesterday's volume, was 1 million shares the upside. The day before was 1.2 million shares. The day before that, 1.7 million shares. So we can see in today's volume, 223,000 shares in an hour and a half. So volume on this little bounce out here, that's all that we're really seeing. It really looks like it's setting up more of the B to a C of A to B equals CD down. And this is a nice equity, nice looking stock chart out here. It's got a nice high volume high out here, which we'll use as the May 13th time frame. So it may be an equity just simply to keep on your watch list and see what happens. But here's a nice example of a three-gap play and how it can actually work for you. Let's go take a look at Alta Salon. That's the leader really in the clubhouse today. It's up $13 and up 15%, and volume still continues to accelerate, but it has not closed the gap. This thing is going against a downdraft that had 7 million shares. So far today, it's up with 4.1 million shares. It should be able to fill that gap, which would mean a close inside $98.26. Folks, it is Wonderful Wednesday, and Basil's being kind enough to come back from a vacation to do his show today. So stay tuned. Basil Chapman is up next. It is Wednesdays. That's Larry Pesavento, followed by Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great day, folks. I look forward to seeing you tomorrow in the morning. Take care.